Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis method to Netflix over the short term. But as usual, let us start with the major structure over the monthly chart. Of course, it's clear that over the monthly chart, the structure is negative and all major monthly supports are broken. The first one was around $400 and the second one is around $228. So the structure in general is still bearish over the long term, and for sure it is clear that the selling pressure is way much stronger than the buyer's presence. So see, keep in mind that the size of the upward monthly action is much more less than the effect of the very long black candles over the monthly chart. And of course 228 zone will act as a strong resistance. It may be plus or minus $10. Okay, for the time being also we can notice that the decreasing volume during the drafting sideways or the slight correction that we may see later on, it's on decreasing volume. This is not encouraging over the long term. That's why please do not rush. Let us check the long and the medium term trends over the weekly chart. It's clear things are the same. Downtrend line, downtrend channel line. The stock is still within the channel on the downside. Nothing yet is broken to the upside. The monthly resistance intact. The downtrend from the weekly chart still intact. So the medium term picture and the long term one are still negative. And I can say it clear, as long as the stock is closing below 228, things are negative over the long and over the medium term picture. So what is the story behind this volume, relatively attractive volume, maybe above average a little bit, and this weak action? This will require to check the daily chart for the short-term details. Here we can see a lot of very important details. The stock was drifting sideways below short-term and psychological resistance around $200 up to 204 or 205, while the support was around 162. The stock was trading sideways and moving within a consolidative phase between the support and resistance. Now we can see it's picking up volume the last two sessions, and it managed to break above the 204 level, which is considered short-term resistance. Until now, and as we can see, it is considered positive, but this positivity is over the short term only. It did not change the structure of the bigger time frames. So what is required from Netflix to gain positivity over larger time frames is something like this. We need a break, decisive break of the downtrend long-term line, and we need a decisive break above the horizontal monthly resistance. So we need a joint break above these two types of resistances, after which we will then require 2 or 3 days close above these two resistances, and it's preferred that the candle of the break comes on an above average volume, while the confirmation days come on below average volume. This scenario over the short term may indicate a change in the structure over longer time frames, and only then we may target areas like 260 or the nearest weekly support around $300. So it's obvious we need increasing volume during the break above 228. Until then, we cannot consider that the last 3 or 4 sessions changed the bearish structure of the stock. We need a break above 228. So please do not rush into conclusions that everything now is okay and Netflix turned upwards and the trend line has been finished and a new uptrend is in the make. No, do not rush into conclusions before a break above the monthly resistance above 228 takes place and confirm it. Only then we may come into a virtual trade on the buying side with a stop loss below 200 and a target around 260 over the short term and around $300 over the long term. Do not rush. These tactics are just in case the conditions are met and the volumes are confirmed. That's it for Netflix. Again, please no rush. Please like, share and subscribe, and see you soon.